Hi guys, I'm Dan, this is Kai, we are the directors at Crescent Mortgages, and today's FAMQ will be giving you some more information on critical illness cover. So we are mortgage advisors, but we are also protection advisors, and that is obviously a big part of the house buying process, that you do ensure that you are protected. We just want to give you a bit more information about how it works. We understand that actually looking online it isn't always the clearest when you're trying to understand the finer details. So we're going to give you a bit more info, help you work out if it's right for you, and if you have any questions you can get in touch. Let's jump into it. Okay, so if you're watching this video, then the likelihood is that you're interested in critical illness cover and you just want to understand a bit more about it. So we're going to just kind of skirt over the basics. Obviously, it can get really complicated when you start to get into the finer details, and every insurer is different, but we're just going to give you the basics, and obviously if you do have any more questions, you know where we are. So I guess the first thing, Kai, what is critical illness cover?
Critical illness cover. So it is a payment made to you if you get an illness that's specified on the policy. If you get a particular illness, cancer for example, it will be an amount that pays you to do whatever you want with.
Yeah, normally a tax-free lump sum.
Yeah, tax-free lump sum.
There are kind of other ways that you can do it. Normally a tax-free lump sum paid to you if you are diagnosed with one of the illnesses covered on the policy. So essentially critical illness is a type of insurance. We should highlight that it's not life insurance, so it's not there to pay if you die. That being said, a lot of critical illness policies do include life insurance as part of the cover, but the main priority here is that it's paying you if you become critically ill and are diagnosed with one of the illnesses on the policy to a specified severity. So I guess, how would it benefit someone? What's the kind of the long game? Why would you take it out?
What you do? So a lot of people take it because if you were to get an illness, as again, if you're watching this video, you probably already thought about this, but if you were to get cancer, most people need time off work, they might need private care, whatever it may be, and the idea of that money is to basically do what you want. So if you're going to get, I don't know, 50 grand, 100 grand, whatever you want to cover yourself for, that money will be there to do what you want with. So for some, it just takes the edge off. It just takes the stress away, and they can take time off work. Some they'll go and they will pay for private care to avoid maybe waiting lists. It is just there to make sure you get better and get back on your feet, so you can carry on, hopefully, and live a normal life. That's the idea of it.
Yeah, obviously that's not always the case. Sometimes you would go on to, from a serious illness, you would go on to pass away. If that is the case, you would potentially have a separate life insurance policy in place that would then pay your family, your beneficiaries, if you were to pass away. But the critical illness is there to protect you and help you financially if you were diagnosed with an illness covered on the policy, which obviously would have an impact on your life, your well-being, and your ability, potentially your ability to work. I guess there's just a couple of basic things that we want to mention. Anything you want to jump in with, or shall I fire away?
No, you go first. Yeah, you go.
So the first thing is that, as with any kind of life insurance, the younger you take out the cover, the cheaper the premium will be. So if you're a young and healthy 25-year-old, you're going to get, and you take out a critical illness policy for the next 30 years. So if you are diagnosed at any time in the next 30 years, you will receive that payout. The premium is going to be significantly lower than if you're 50 years old and potentially with a couple of ailments, a couple of health issues, because that would all need to be declared on the application, because you obviously represent a higher risk to the insurer. So I think that's one thing we do want to highlight, is that a lot of people think, oh, I'll leave it till I'm older, but if you're young and healthy, that's kind of the best time to take it. And we would generally advise taking out a policy with a guaranteed premium, which means once you take out that cover, and you're not tied into the cover, if you decided you didn't need it, you can cancel it at any point. But once you take out that cover, the premium will be locked in and will be guaranteed. So it will never go up for the duration of the term. So you will benefit by taking the cover out at a younger age, providing you do need cover at that time.
Yeah, I think separate points to that, it is, I think as Dan mentioned at the start, it can get quite complex at times. So there are quite a lot of different insurance companies that offer it, and each insurance company will often have multiple policies that you can kind of sign up or buy, or whatever you want to call it.
Or with different levels of kind of how bad the illness would need to be before you could claim, or the number of illnesses covered. So each insurer's illness policy does differ to the next.
Yeah, so it's pretty hard to buy off a shelf. without knowing, certain providers will be better for different ages, different genders, maybe different job roles. So again, it's not something you can. Life insurance is a bit easier, but critical illness you can't really just buy online. It's too risky that you buy something that isn't relevant or isn't right for you, and you might end up getting a policy that doesn't work at all for you.
Yeah, so we'd always tell you get advice and don't just go online and find the absolute cheapest. If you find the cheapest premium, but that insurer or that policy doesn't cover you for that many illnesses, or the kind of the definitions of the illnesses, it needs to be more severe before you can make a claim, then it actually might mean that paying a little bit less each month results in you not being able to make a claim when you become ill because the policy isn't very good. So you do want to obviously find good value, but as with a lot of things, you need to compromise that with the quality and the quality and the service that the insurer provides. Anything else? I mean, it is a complicated one, isn't it? There's a lot to get into.
Yeah, it's easy. It's easy to go around the basics quite quickly, as we have there. If you get into the detail, it's a conversation that you have to have personally, really.
And I think the main, if you have a child, I think you really do need to start looking at potentially taking out some cover in case something happens to you. If you take out a mortgage and obviously you've got that debt over your head again, you probably do need to start looking at some cover, potentially a change of job. We don't necessarily advise that you rely on work benefits, but if you do change job and your benefits change, then that is another time to review your cover. But I think, as with most topics, everyone is different. So if you do have any questions or you just want to discuss it further, just understand what might be right for you, maybe obtain some quotes, then get in contact with us. We can take some of your basic details and give you a bit more information. Any questions, like I say, give us a call or leave them in the comments, and we'll see you next time. Thanks a lot.